Hey, what's up, guys? This is the Smart Money Technician, and welcome to today's video. Now, before I begin this video, I know that I have been gone for a long time, and that is because I've just been contemplating the things that I'm going to teach in this video. Also, have been improving as usual, as I'm always improving, but I've been contemplating whether I should share this because this stuff can be complicated, so I'm going to try my best to articulate it in a way that you can be able to understand it, but at the same time, you're going to see that there are plenty of trades to take, and initially when you learn this can make you to overtrade. So I don't want to foster a bad habit in many of you that you start trading all over the place. You start trading Asia, you start trading London, you start trading New York. I don't want that for you guys. I want you guys to pick a session and stick to that session and limit the amount of trades that you take. This is the best thing that you can do for yourself, right? This video is also going to be very long, so if you're one of those people that have short attention span, you might as well click off now. But I promise you that you are really missing out on the things that are going to be discussed in this video. I don't even think I'm going to really edit the video much, right? I'm just going to try to get into all of this as much as possible because it is a lot of information. You're probably going to have to watch it multiple times if you really want to understand the things that are going to be discussed in this video, right? So without any further ado, let's just get into the video. Let's get into this. So crack in correlation theory, the introduction to the 30 bars IPTA look back, right? So let's first cover some foundational topics, right? So the first thing that we want to conceptualize is understanding candlesticks, right? So we have a basic swing high over here, right? So this is a three candle formation where you have candle one, candle two, and candle three. Now I've discussed this in, I believe, my first ever video on this channel, but I'm just going to revisit this idea, right? So over here, we have candle one, we have candle two, and we have candle three. Candle two is the swing high because it has a lower high to the left of it and a lower high to the right of it. So it's a swing high, right? And then the same thing, if we reverse it, is a swing low where we have a higher low to the left and a higher low to the right, making this a swing low, right? Nothing too complicated. But we want to look deeper into swing highs and swing lows or swing formations, right? We want to look deeper into that. So there are different kind of swing formation patterns, and these patterns help us to know what the next candle is likely to do, whether it's about to expand higher or lower. So the first swing formation pattern, right? Now, before I even get into this, right, I learned this from T Trades and GxT. So you can watch their channel if you want deeper information, but I'm not trying to go too deep. Otherwise, this video is going to be very long, longer than it already is, right? So we have what we call a C2 closure. It is when candle number two, right, opens, takes out the high of candle number one, and then closes back inside of the range of candle number one, right? So that is what we call a C2 closure. Usually when that happens, right, we expect that candle number three is going to open, rally up a bit, and then expand as a continuation of this, right? So it's a C2 closure. Now, usually on the lower time frame for a C2 closure, like inside of this C2, right, on the lower time frame, there's probably like a key level, like a fair value gap that price will open and trade into before it reverses. In other words, this candle, candle number three, which is the candle we look to trade whenever we see this pattern, we aim to use this candle to, first of all, see it reject inside this candle's range and then continue in the direction that we are expecting. So this is a C2 closure, right? The next candle formation is a C3 closure, right? When we have candle one, candle number two, right? But we don't know that candle number two is going to be the highest in the formation, right? We don't know that just yet. So what we see is that candle number three opens, fails to take out the high of candle number two, and then it closes past the opening price of candle number two, and it also takes out the low of candle number two. So we now see that, okay, this is a confirmed swing formation in the market, and when the fourth candle opens up, we will expect that it is going to first open, trade a bit into this candle, and then reject lower, right? So inside this candle on the lower time frame is usually some kind of gap, and I'm going to get into the time frame alignments for all of these. You're going to see that this is very, very mechanical, right? So this is a C3 closure, right? The next is what we call a C2 expansion into reversal, right? So basically what happens is that price opens up, right? Price was initially going up. We are at a key level, right? And then price just opens, rallies, taking out the high of the previous candle, and then rejects lower. There is a way you can trade this, and you basically trade this candle using the other swing formations here, right? You can use this swing formation, and you can also use this swing formation to be able to catch these kinds of candles where the candle opens, rallies. So on the lower time frame, a swing formation pattern is going to form within this wick, and you would be able to anticipate that this candle is going to expand lower as well, right? So the key to this kind of candle is that it has a small wick. That's how you know it supports expansion. You can go watch T-Trade's videos on wicks matters, right? The wick size matters, because if it's a small wick and you are expecting bearishness, you know that that is a candle that really can expand in your favor, right? So watch this over and over again so that you get it. You can watch T-Trade's videos on it, GxT's videos on it. They really go into depth on this, right? I'm not here to go too deep into it. I'm just here to conceptualize and explain it, right? So next slide. Now we're talking about key levels, right? So when it comes to key levels, we only use two key levels primarily, a fair value gap or a liquidity, which is a swing high or swing low, right? So what we want to see is that when price trades into, for example, a fair value gap, a swing formation pattern happens in there. Are you understanding? And that's how we confirm that this fair value gap is going to send price lower. So these patterns that you see here, right, they are happening at the key levels, right? And then we will anticipate that price will trade lower, right? So now we're looking at a key level as a liquidity. So price gets there, it prints one of those swing formation patterns at the key level, and then it trades lower, right? So that's how you're able to anticipate. Now, another thing you obviously know is that at these key levels, for example, a fair value gap, we can also have an SMT formation. So what essentially we're looking for is we are looking for price to trade into the key level, give us SMT and a swing formation, then we know that this key level is going to hold. In the same way, when price trades into a old high, we possibly have an SMT between the highs in another asset or a near-term SMT here, confirming that price is going to reject from this level. And we also have a swing formation there, and that's how we confirm. So it's SMT, right, and a swing formation. You can also have a precision swing point as well, a PSV there as well. So don't worry if this sounds very complicated. We're going to go into a lot of examples. You're going to see just how repetitive this stuff is. It's going to blow your mind, and it's happening every single day. So there's no need to be afraid that you're missing out any trades. It's there every day. And once I show you, you're going to be shocked how it's been happening right under your nose, right? So now we're going to go into the live chart examples. Now, before we get into the chart examples, right? I just want to cover the 30 bars look back, right? So when gauging key levels, what are key levels, guys? The key levels are these, the liquidities, right? It can also be a low, right? So you can just reverse that for bearish, and a fair value gap. When, right, you are engaging key levels, it is important to ensure that the time price engages these key levels, that it is within a 30 bar look back, right? In other words, you're not going to look for some fair value gap that is so far in price. The algorithm is not considering something like that, or some old high that is so far back in price. And notice here, I say bars. I did not say days. I did not say weeks. I did not say hours, because this is not restricted to a specific time. It is more so restricted to the amount of candles, right? So I'm going to show you that in the following examples that I will share in this video, right? So if it exceeds 30 bars, the algorithm is either not considering it or you are viewing it through the wrong time frame. And you need to go to a higher time frame to view that level that you're seeing a cracking correlation at or a reversal signature at. Okay, so now let's look at the different time frame alignments. So we're looking at time frame alignments for key levels and swing formations. So for example, if you're getting a daily swing formation and you're trying to trade the next candle, right? So say for example, right, the weekly candle was a swing formation and we're expecting bullishness. We see in SMT it was at a key level, it gave a swing formation on the weekly. And coming into the next week, right, we were expecting price to continue higher. What you will do is you will go to the daily time frame, right, and you will try to see the daily reject in a gap or a key level that is in the previous week's candle, right? So let me just go back to the swing formation, right? So say for example this was the weekly time frame, right, and then this candle is a new week. We see that, let's say there was an SMT, let's say this was a PSP or whatever, we see it's a swing formation as well. We're expecting here to reverse, right, and then the next week we see price open and rally up. This open rally up, right, it should be rejecting inside a key level that is within this candle on the daily time frame. Since this is the weekly, we go to the daily. So this candle, you're going to go to the daily and try to find like a fair value gap that is inside here so that when this candle opens, it rejects inside. So can you see how we're showing you exactly how to choose which gaps? You're not randomly choosing any gap. You're choosing specific gaps and they exist within the previous candle's range, right? Because when price opens up here and it's rallying up, it's rallying into something. It has a place where it will stop rallying up and it would have met its objective. That exists within this candle's range. And usually this candle, whenever it has a long wick like this, right, you want to mark the wick out, right, and you want to see price really get rejected in the lower half of that wick, just so that this one doesn't have a long wick as well, because whenever it has a long wick, it has a hard time expanding in your favor. So you always want to make sure that, and we'll get into that as well, right? So back to here, right? So if we're using a weekly swing formation, you find a daily key level that is within that weekly swing formation. Same thing, you go from the daily. If you have a daily swing formation, right, you can use the 4 hour to confirm it, right? If you have a 4 hour swing formation, you can use the H1 or the M30 swing formation or the M15, but I only use the M15 if there is a two-stage on that M15. And then when you go from H1 or M30 or the M15, you use a M5 or M3 CSD. Don't worry, this sounds, I know this is just words, so it's very hard to conceptualize it. We will go into chart examples and you're going to see how I do a top-down approach right to the M3 or M5, and I'm able to catch a trade because I like using the M3 or M5. It gives me the best risk to reward, even though I'm framing a higher time frame trade, right? So let's look at that right now. All right, so now we are on the charts, right? And before I even get into these examples, right, I just want to show you some indicators that I created. They are very helpful to me, especially if you understand this method and you understand what you're looking for. These indicators are not there to make you a profitable trader. If you're not a profitable trader, they're not going to be helpful to you, right? So I just need to preface this by saying that, right? So I have a PSP indicator. It helps me to see PSPs on the chart. Sometimes, I'm not so logged in. So, right, it just helps me to see them and I don't have to look carefully. Now, the indicator, sometimes we'll get it wrong sometimes. And that is largely due to some TradingView PineScript faults. I don't know when TradingView plans to improve PineScript. Maybe they're going to bring out like a new version of PineScript. So the indicator is not perfect. You don't use the indicator and try to take trades based on the indicator because sometimes it doesn't get it wrong. So you always have to do your due diligence to check. So at least just check. It just points me in the right direction and I know exactly where I'm checking, right? So I'll show you the indicator. This is the PSP indicator. And what I do is I plug in the triad that I'm trading. So this over here that I'm looking at is the gold triad, right? It consists of gold, silver, XAU GBP, and XAU euro. And it is very important that you use the Forex.com for XAU, right? For gold, you want to use Forex.com feed. Why? Because this is the feed that opens up at 1800, just as GC and SI, just as gold futures and silver futures open up at 1800. This feed also opens up at that time. So it's very important, especially when you're looking at precision swing points, right? You don't want to get an incorrect precision swing point. So that's very important. Okay. So another thing that I want to say is that when it comes to comparing gold and silver, I only compare gold and silver together, but I do not compare silver with XAU GBP. I do not compare silver with XAU euro. Okay, I compare gold with XAU GBP. I also compare gold with XAU euro. So I compare gold with these two, but I don't compare these two with silver. So any kind of SMT or PSP that is taking place between XAU GBP and between XAU GBP, XAU euro with silver, I ignore. Silver has its own triad as well, and I'll show you that later on, right? So this is the PSP indicator, right? There are multiple settings that you can do, right? Same thing over here with the sequential SMT. It mainly focuses on monthly, weekly, daily, and 90-minute cycle sequential SMT. I'm not interested in other sequential SMTs, just those ones as well. And I've plugged in the assets that I'm looking for it at. And I also have an SMT fill indicator. So I had to pay people to help me code this or whatever. So if you're interested in it, it is up for subscription, right? You don't have to get it, right? But if you do want to get it and you just want to make your life a bit easier, it can help you get the different cracks and correlations much more easier, and you don't have to look too long because it's just going to be point blank on your chart and you'll just see it there immediately. And it's your job to qualify them, right? So if you're interested in them, you can link in the description. You can contact the assistant who can help you get set up for it, right? Now let's get into some chart examples, right? So over here I have gold, I have XAU Euro, and then I have silver over here. Usually I have XAU GBP as well, but the cracking correlation that we're currently viewing is between gold and silver. And you will notice that I did not mark it with XAU Euro because the cracking correlation exists between gold and silver, and we never mark anything that is taking place in silver on XAU Euro or XAU GBP, right? So that's why I only have it marked on gold and on silver. And you can see it's a sequential SMT. You can see that price comes, takes out this high over here, while in that asset over here in gold, we failed to take out that high. So we have an SMT that has taken place. So let's get into the 30 bars rule, right? So the algorithm is going to look back 30 bars. So for instance, if we take this high that price takes out over here, right? And we measure the distance from where that high is to where the crack in correlation takes place, right? You can see that that is 19 bars. So that is within a 30 bars range, right? But if I went to the 4-hour time frame, you will see that if I do the same measurement from there all the way here, suddenly it's now 114 bars. In other words, this cracking correlation is not pegged to the 4-hour time frame, but it is pegged to the daily time frame. Do you understand? So if we are going to get a crack in correlation to confirm like a PSP, so for instance, if price takes out this high, then forms a PSP, the algorithm is confirming that this PSP is confirming this SMT because they are within the same 30 bars, right? I hope you're understanding. But over here, we do not get a second stage confirmation to confirm this SMT. So what we need is a lower time frame confirmation. And remember the time frame alignment, we go from which time frame? This is the daily, right? So we go from the daily to which time frame? The 4-hour. You're going to see that this is very mechanical approach of doing things. So we go from the daily to the 4-hour. So I'm going to go to the 4-hour time frame. Now, we did say earlier on that this large SFT is not pegged or tagged to the 4-hour time frame. So the way that we are going to confirm it, because a PSP confirming this large range SMT is not enough, because that's like seeing price take out a monthly high and you're trying to use like a 1-minute break of structure to trade along that. Like that doesn't make sense, obviously, right? So you need two stage over here taking place in order for you to confirm this larger SMT. It is not enough for just a PSP to form, because you can see over here, this candle right here is a bearish candle, while in gold, it's a bullish candle. So that is a PSP. But that by itself is not enough. So what you need is another cracking correlation here or on a lower time frame that is within the 30 bars range to confirm this larger SMT, because the PSP by itself is not enough. So what you see over here is that the 6 a.m. 4-hour candle comes, takes out the high of the PSP, while the other asset fails to take out the high of the PSP. So what we have is a two-stage PSP, right? And the reason why I say two-stage PSP is because the PSP comes first, then the SMT comes second. The immediate next candle fails to take out the high of the PSP. So that is a two-stage PSP. So here it takes out the high of the PSP, here it fails to take out the high of the PSP, right? So you can see that's a two-stage setup, and that is why the price then eventually does what? Reverses. So this meets the condition to be able to allow price to reverse. Why? Because if you measure the distance from this SMT taking out the high of the PSP, is it within 30 bars? Obviously, because it's literally the next candle to the left. So it obviously falls within that 30 bars range. That's why the market gives that extra cracking correlation to allow price to then fall, right? Because many times you're going to see that, for instance, if you had a PSP here trying to confirm some large range SMT and you just had that PSP, many times it's going to fail. I'm telling you that the algorithm does it in a very specific way. And you know what's very interesting about this is that this ties back into quarterly theory and the time frame alignment for quarterly theory. So let me just quickly show you that. So we're doing a bit of experimentation and proving concept over here. So I'm going to choose here the day quarterly theory, right? I want to show you something on quarterly theory. I'll just full screen this, right? So for instance, let's just pretend like, for example, this low, let's say there was a low over here, right? And over here, price takes out the low of the previous quarter. We're having like a sequential SMT. If you measure, right, I'm going to view this through the 1-hour time frame because I'm using the weekly cycle, right? So it loads up, right? So say there was this low over here or something like that. Let's say there was sequential SMT, right? Let's say in one asset price takes out the low of the previous quarter, while here it's failing to take out the low. We'll just pretend like this is the low of the previous quarter. You are going to notice that if you measure the distance from the sequential SMT low to the cracking correlation, you will notice that it is within 30 bars most of the time. Go test this on all of the different quarters. You're going to see that, right? So you can see over here, it's like 24 bars, right? And if you did that on the 90-minute time frame, the microcycle, I mean the 90-minute cycles, the daily cycle, the weekly cycle, the monthly cycle, and the time frames that they belong to, you'll see that most of the time it belongs within that 30 bars. So it is my belief that when Day came up with the time frame alignment, he was trying to encapsulate this aspect of the algorithm, looking back 30 bars, right? Have you ever noticed that, for example, let's say you had a low that is all the way here, right? So let's say that low right there, right? And then you had a sequential SMT taking place very late in this quarter. Do you notice that those kind of sequential SMTs usually fail? And the reason they fail is because if you measure the distance, right, to let's say the cracking correlation is taking place here, can you see it's more than 30 bars? So that is why sequential SMTs that happen very late in the quarter fail, especially if the low of the previous quarter or the high of the previous quarter is very early in the quarter as well. So quarterly theory was created to try to encapsulate this, but restricting you within a specific time. So you don't need to trade quarterly theory to be able to trade SMTs. You can just use the 30 bars rule, and suddenly you no longer need this indicator here anymore. Like if you notice, I don't have the quarterly theory indicator on my chart. In fact, if I'm looking at sequential SMT, and let's say for example, I'm looking at monthly cycle sequential SMT, I just go to the weekly time frame and I want to see the weekly candle, one asset taking out the low of the previous candle, while another asset failing to take out the low of the previous candle. And that's really how I trade quarterly theory. Or I use the daily for the weekly cycle. I use the 6 hour for the daily cycle, and I use the 90-minute time frame for the 90-minute cycles. So I just look at the previous candle. For instance, let's say this candle fails to take out the previous candle's low, while in another asset, it is taking out that previous candle's low. I know that there is a 90-minute cycle sequential SMT that's taking place. That's how you can really shortcut quarterly theory. You don't need to have the indicator on your chart if you don't want to, right? But also with the 30 bars rule, you are encapsulating quarterly theory and also other aspects of the algorithm as well. So the trades that a quarterly theory trader will take, you will be taking them as well. But some of the trades that you're going to be taking, a quarterly theory student might not get them because they might not fall inside that sequential SMT or quarterly theory time frame, right? So I just wanted to add that as well. This video is going to be very long, and I'm trying my best to not hold back and to share everything as possible, right? So I'm going to talk a lot, but it's all for your benefit. Right, so now we get back to the two-stage setup that we were having over here, right? So now we've established that because that price was so far apart, it is not enough to see a PSP over here. We need two stages on this particular time frame to constitute a reversal, which is ultimately confirming that larger range SMT that we are seeing. And we can see that when price opens and takes out the high of the PSP, right? We can see that that candle opens up first. So what candle formation is that? That is a candle 2 reversal into expansion. And the way we confirm a candle 2 reversal into expansion candle is with a lower time frame swing formation. And we are on the 4-hour time frame. So we are either going to find that swing formation on the 1 hour or 30-minute, or the 15-minute if the 15-minute has its own two-stage. So over here, because the price opens and it's forming the SMT, I usually try to catch it at the wick using the lower time frame swing formation. So we'll go to the 1 hour time frame, 1H, and we can see that this is where the SMT is taking place. And look over here, right? So this candle is making the higher high. Notice that this is where the 4-hour opens and it rallies up, causing the SMT, right? So this candle makes a higher high, right? And then the next candle fails to take out that candle's high, right? While in XAU GBP, but let me go back to XAU Euro, right? You can see that in XAU Euro, we have this candle failing to take out that candle's high while closing below this candle's open. So this is a C2 candle, and then the C3 fails to take out that high while it closes below the opening. So this is the C3 closure swing formation pattern that we just discussed earlier on. So once this candle closes, you can literally on the lower time frame catch the next candle for the sell. So this candle is 8 o'clock. The next candle is opening at 9 o'clock, meaning from 9 o'clock, once this candle is confirmed, you on the lower time frame, you can catch it from 9 o'clock. Now, I just want to say this as well. I'm using the 1 hour time frame here. But what did I say earlier on? I said that you catch a 4 hour swing formation with a 1 hour, right? So you can catch it with a 1 hour or you can catch it with a 30 minute. Now the 30 minute is much more faster, as well as the 15 minute is much more faster. So sometimes, let's say the 1 hour has confirmed it here, but a long time ago on the 30 minute or the 15 minute, they may have also confirmed it as well. So usually I would have been in the trade even before this candle closes already. So let me show you that on the 30-minute time frame, right? So on the 30-minute time frame, you can see that right, I believe on silver here, right? You can see on silver right here, this candle closes as a C3 closure. So when one of the assets gives a swing formation, you treat the other candles as a swing formation as well. So if I was going to trade gold, since silver gave a swing formation on 8, meaning from 8:15 already, from 8:30 already, I can already start looking for an entry. So I'll go to the 5-minute time frame, right? So you go from the H1, M30, or M15. Which time frame you go to next? You either go to the M5 or the M3 time frame. I'm going to use the M5 here, right? So from 8:30, right? I just want to show you. Can you see over here, right? From 8:30, right? Right here we get a second cracking correlation. So you can see over here, we break structure and then we give another CSD. So we have two CSDs right here. If you used M15, you would have seen that M15 already confirmed it here, so you could have been in on this one, but that's not the issue. 8:30 opens up here and then it gives another CSD. Usually you can enter in at a retest of the CSD, but sometimes it doesn't really retest the CSD. So if I see that the stop loss is not too large, I just sell as it closes there, put the stop above the high, right? And I target like some near-term liquidity or 1:3, right? So you will see that that is how you would catch this setup right here. You easily catch 1:3. In fact, it goes more. You're going to see that some of these setups go as far as 1:10. It's crazy, right? So that was us catching a reversal candle. I want to also show you how we will catch a continuation, right? Okay, so that was an example on how you would catch a reversal candle, which is the C2 reversal into expansion. So this is how you catch a C2 candle, right? But sometimes, let's say you didn't catch that, you can always catch the continuation, right? So this one is the easier one to do, right? So all you do, right, is that within this candle, you can find a key level, which is a fair value gap inside this level. And this candle, right, will open, rally into this candle's key level and trade lower. So we're on the 4-hour time frame, and the next time frame on the lower time frame to find our key level would be on which time frame? It's going to be on either the 1 hour or the 30-minute time frame, right? Only the M15 if we have a two-stage, as I said before. So we want to see price open, trade into a key level on the lower time frame, and then get rejected. And we're obviously going to use swing formations and cracks in correlation to confirm the wick, to confirm the rejection lower. So I've marked this right here, and I'm going to go to the 1 hour and check, right? You can see on the 1 hour time frame, we have what? A fair value gap, right? So when 10 o'clock opened up, right, a fair value gap form. It could have also been the 30-minute, but here in this case, it's a 1 hour time frame, right? So if you look very closely right here, let me just check XAU GBP as well. Can you see that XAU GBP is a bearish candle, while here it is a bullish candle? So we have a PSP there. Let me mark. This is how I mark PSPs, right? So I just mark it with that symbol right there. Let me make this a bit lighter because that looks too dark on the charts, right? I'm just going to take this out so that it's not really a distraction, right? Because we're already, that is our, this is what we call our refined key level. A refined key level is when you have a expansion candle and you want to trade the continuation of that expansion candle on the next candle. You find a key level within that time frame and do it the same way that I showed in the time frame alignment. And you can see here we have a 1 hour gap. Price trades into the gap, forms a PSP, but that's one stage, right? We need two stages. So here, the next candle fails to take out the high of this PSP, while in gold, right, we take out the high of that candle. Notice I do not mark a PSP, I mean, this is silver, not gold. Notice I do not mark a PSP on silver because the PSP is between XAU GBP and gold, right? Remember what I said earlier on? Okay, so keep that in mind. So we have a PSP, sorry about that. We have a PSP here. And And then we also have the high being taken out there as well. So we have SMT and a PSP. We have a two-stage PSP. We can confirm it. So on the next candle, we can immediately be looking to sell, right? So from 1300, I'll go to the 5-minute time frame again. Let me take this out of the way. Boom, boom, boom. This is where 1300 stands up, and you basically look to the left where the SMT is, and we can already see that there is a change in the state of delivery right here. So you always want to anchor the change in the state of delivery to where you see SMTs taking place. So even right here on the lower time frame, I can see like a higher high, while over here I'm seeing like a lower high. So if price closes below the opening of this candle right here, you can see that there, I would see that as also a change in the state of delivery right there. So you can see that there. So literally as this candle closes right there, you can sell in that stop loss just above the high right there. And just look at that. Look at the risk reward on that. Crazy, isn't it? I'm telling you, once you master this, bro, you literally will not run out of setups. This is a setup that is happening around the PM session. So you can see that you can even trade the PM session if it has a setup, right? We are just trading the continuation of what we established earlier on. And obviously, you would know that this was a market maker style model forming, right? So you can see how you get continuations within that context. Amazing, isn't it? We'll get into more examples because I know right now you're still on the fence and you feel like this is being cherry picked, but once you see example after example after example, you will see that it's the same thing every day. Last week it happened, the previous week it happened, the previous day it happened. It happened so many times. I was shocked when I saw it. It's amazing. I'm not gonna lie to you guys. And it's not like I'm even charging you for it. So why would I even lie about this, bro? It's crazy. I'm gonna show you that even last week, I believe I passed 2 funded accounts with it. Nothing too serious because once like you master this, bro, you're gonna see that passing challenge accounts is not gonna be that hard. I mean, just look how much price expanded. We'll get into more examples so you can see, right? So that was this example. Okay, so you can see that this day, remember what we just did on the 4 hour, how we traded a continuation on the 4 hour within the same day? Now we're going to a new day and you can see that we've seen that the SMT does expand, right? Price does indeed expand. And because it expands, it confirms that this is a C2 daily candle, right? A C2 expansion to reversal. So coming into the next day, we would anticipate that the next day is going to be a candle number 3, meaning that it's not going to go higher than this candle. So what does that mean? We're bearish because the SMT was confirmed, price expands. The next day we expect a continuation, and the same thing that we did on the 4 hour time frame is literally the same thing we're going to do again. Now, usually I like to see price get rejected in the lower half, but if it happens in very early in the session, where price touches the EQ very early, it can still reverse lower, right? So I'm going to go to the 4 hour time frame over here, right? And let me just put this back right here. I hate this, to be honest, because sometimes TradingView has a glitch where you can't place your anchor on the 1800 candle. You have to do it a candle earlier. So this is how we caught the sell, right, this day. So the PM session comes about, right? This is the PM session. And then now let's say we're coming into a brand new trading day. Can you see within the lower half that I've marked, this is that daily candle that I've marked. And I said that you always want to find a refined key level on the lower time frame. So we went from the daily to which time frame? The 4 hour. If we were working, just as we were working here, right, where we saw a 4 hour candle and we were expecting the next candle to be a continuation, we went from the 4 hour to the 1 hour, or even the 30-minute, or the 15-minute, if the 15-minute had a two-stage Kraken correlation there. You see how mechanical this is? So here we're going from the daily to the 4 hour, and where do we see? What do we see? We see a gap right there. So coming into the next day, we would expect that this gap right here, and this gap right here are going to be our refined key levels for the day, right? So 1800 opens up, and then it massively trades into EQ. Because it's happening in the Asia session very early on in the day, and Asia just opens up, does not take out the previous day's low. No SMTs at the lower, it just opens and trades higher. I will permit it to trade into the EQ for this day because we rallied up straight away. If you look at T-Trade's video on daily profiles, you know when the day opens up and rallies up first, it usually indicates that it's probably going to be a bearish day, right? So right here, we trade into the key level on here. Now you can see in gold there is no FEG there, right? That is still fine as long as one of them has a fair value gap. That is enough for us, right? So we can see that this candle expands into the key level. So because it's an expansion candle, I would anticipate that the next candle is likely going to be a C2 expansion to reversal. See how we opened and we rallied above that high? Possibly the same thing can take place right here. So I'm just going to show you that. You see how that happens? And notice this. We have an SMT right there, right? Can you see that? So when you see that happening, right, we have a key level. We have our swing formation forming C2 expansion into reversal. We have SMT taking place. I'm not supposed to even mark SMT here because the SMT is between XAU GBP and gold, right? So we have an SMT there. But this is one stage. So whenever I see something like this, an SMT taking place in real time, I haven't waited for this candle to close just yet. I'm trying to catch the reversal candle, right? So I will go to the H1, and because I only have one stage, which is just one SMT, right? I am going to try to catch the second. But you know what I just noticed right now? It's crazy. It's crazy. Sorry about that. Look here. Look at this candle right here. This is the high of the fair value gap, right? So this is the candle number one, candle number two, and candle number three of this fair value gap. Let me make it darker so that you can see that, right? So just make it darker. So this is candle number three of the fair value gap. I'll just also take this out of the way, right? This is candle number three. And you notice that we trade into the fair value gap there. But over here, we don't trade into the high. That same high right here, which would be the opening of the fair value gap, here we don't get into it. So we actually have two stages right here. Here, where we fail to get into it, right? While here, we do get into it. And then the next candle does what? Takes out that candle's high. Sorry about that. The next candle on XAU GBP fails to take out that candle's high, while here it takes out that candle's high. So that is in itself already a two-stage setup, confirmed. So I don't really need to be using the 1 hour or the 30-minute to look for a second stage. I just now need to wait for a swing formation to indicate that I can go to my entry time frame, which is the M3 or M5, wait for a CSD there, and I can enter, right? So you go to the 1 hour, right? On the 1 hour time frame, it's crazy that even the 1 hour gave you a second stage. And notice that the cracks and correlations are all within 30 bars of one another. This is how I know it is a second stage, right? So here you have a PSP right there, and it is a C2 closure. So it opens, takes out the high of the previous candle, trades, and close back into the range of the previous candle, indicating that this candle is a C2 closure because at the same time, it's also a PSP. So look here, it's a bearish candle there, while here it's a bullish candle. So literally from 2300 Asia session, isn't that crazy? Asia session trade, you could have looked for your entry right there. So from 2300, that's when we'll be looking to enter, right? So let me show you that right there. This 2222, and then the next candle is literally 23 right here. And when this 23 candle opens where you will be looking to enter, you can already see that we already have a change in the state of delivery already with the SMT taking place and the PSP, right? So right there, as that candle open, you can literally just sell and put your stop above the CSD high, right? So right there, entry, stop loss, and you can just target the previous day's low, which would be hectic. But I would just target some near-term liquidity like that, and you can see that that is just 1:4. If you target the previous day's low, that would be like a freaking 1:8. I'm telling you, this method gives very high risk to rewards. I'm not going to lie to you. Obviously, you're going to take partials along the way if you're going to hold that long. I, on the other hand, just go for 1:3, just because, like I said, the funded accounts that I trade, they have like a consistency rule or whatever. So I don't really target that much. But isn't that crazy? Asia session trade. I used to think that it wasn't possible to trade the Asia session, but I'm asleep during the Asia session, so I would not trade this. But if I was awake, this does meet my rules. And I do want to show you guys a trick or a tip when you are trading your CSD, right? So I'm going to take this out of the way so that's not going to distract us, right? And I'm going to put the anchor when we opened on the new candle, right? So this is where the 2300 candle opens because the precision swing point of the high time frame, this is where it was confirmed when this candle has finally closed and we're looking to trade the next hourly candle, right? One thing that you want to do to always qualify your trades is to go to the 6-hour time frame, the 4-hour time frame, and the 90-minute time frame and look at the wicks and also ensure that you are not trading where a gap is very close to you. So I will go to the 6-hour time frame and look at how price looks at the time of the formation, right? Over here, right? Can you see where we open? From the opening price, let me take this out and just put this here, right? From the opening price, right, to where price currently is, where we get the CSD, right there, right? You want to measure how long the wick is, and the wick is only allowed to be long if it is taking out the previous candle. If it is retracing back into the previous candle, it must have a small wick. So over here, you can see that we are taking out the previous candle side. Now, sometimes it's having SMT with another candle taking out the high while this one failing to take out the previous candle side. In that case, it's still allowed to have a long wick. But in a case where it's retracing and all of the correlated assets have not taken out the previous candle's high, it cannot have a long wick. So I always go to the 6 hour and I check that. And I also check on the 6 hour that there is no open gap that is left in price. So say for instance, price was here and we were seeing that sell signal that is taking place on the lower time frame, right? And this gap was just left open. And even in silver, it's left open. In other correlated assets, it's left open. I would not sell there because you are literally selling into a magnet that is against you, because price is going to be more drawn to the fair value gap that is close and will ignore whatever cracking correlation that you're seeing. So over here, we filled in the fair value gap. That's good. And it's taken out the previous candle's high. So even though it is a long wick, a long protraction, where do you measure your protraction? You measure your protraction from the opening of the candle that you're currently in to the high. And you can see this is actually a rather large protraction. But because we are taking out the previous candle's high, it is permitted. You do the same thing on the 4 hour time frame. This is the 4 hour candle, but this is the current candle on 4 hour that we're currently trading in. So you shift that to there, right? And I'll just mark that as a 4 hour open. And I can easily see that when we open and we rallied up here, the wick is so small compared to the previous candle. You always want to compare the wick to the previous candle. That's how you know whether it is a long wick or a small wick. This wick, we can fit it so many times inside this candle, so it's a small wick. So that's good. And I don't see any fair value gaps that has not been filled. That price is near. So that's good as well, right? I do the same thing on the 90-minute time frame. Let me just zoom out. Take this and put that there. 90-minute open. And look at the wick of the 90-minute. It's so small, right? You can fit this wick many times in this previous candle right here. So it supports expansion. And there's no gap that is left unfilled. Can you see this gap right here? Here we filled the gap in, and that, yeah. So it's not like on all three assets the gap was not filled or whatever. I don't believe we fill it here. But because gold, because XAU GBP is filling in that gap, it's fine, right? So it's like a little SMT fill as well, little confluence there. And the wick does support expansion. So when I check all these three timeframes, and then I go back to the 5-minute time frame, right? And I see the CSD, I trust the CSD. I've seen many people trade this and they don't know why they lose it. This is one of those filtering processes that you can filter out bad trades and you can trust a CSD is going to cause price to expand, right? So I just needed to add that. This video is really long, I'm sorry. And then you can obviously see that is where we would enter, and yeah, that's where we would enter. Stop loss above the high of the CSD, and you target something easy for you. Like you don't need to go for crazy risk reward, but sometimes you can if you don't have consistency rules like me, right? So obviously the trade then expands in the favor, right? I could in future do trade management videos, right? But that would make this video too long, so I'm not going to do it in this video, right? So let's go to a newer setup, right? I wasn't even supposed to cover this many setups inside this, but I just wanted to show you guys, right? So I want to show you guys the daily protocol that you should be following, right? So right here, right, we have the silver triad, right? You can see silver futures SI, XAG euro. Now with XAG euro, right, I use ICE as my feed, right? Price feed, ICE. Also for XAG GBP, you want to use ICE. And that's because ICE was the only one that opens up at 1800, just as silver. And it's the same thing. You compare silver with gold, and you compare silver with XAG euro or XAG GBP. You do not compare XAG GBP and XAG euro with gold. Is that making sense, right? Make sure you do it this way. So over here, I want you guys to look at something, right? You can see right there, we have a gap, right? So you can see the price fills this gap over here, whilst in XAG euro, that gap is not filled, right? Sorry about this. We're supposed to be here, right? That gap is not filled. Can you see that? In XAG GBP, that gap is not filled as well. So this is SMT fill. I do have an indicator, like I said, that can help with that, right? In case you didn't see it, because sometimes, let's say I wake up very late, right? And let's say my mind is not at 100%, that indicator really helped me last week. I'm not even gonna lie, because I was very busy. But anyways, when price gives an SMT fill, it also gives a PSP. So look very carefully here. This is a bearish candle, while there's a bullish candle, right? So I'm just going to put that there and paste that here and paste that here, right? So you can see we have, so the next day, because we have this two-stage cracking correlation on the daily time frame, we know that the next candle is likely to be a continuation candle, right? And that is largely because this one is also a C2 candle. So this C2 candle, you could have caught it at the high. But if, let's say, you didn't catch this, right, the next day you can also catch a continuation. But you know what? I'm going to show you how you would catch this, right? Because while this candle is trading, you don't know if it's going to be a PSP just yet because the candle has not closed, right? So when price trades up into that level, right, and it's giving you SMT fill, you would catch the wick with a lower time frame cracking correlation and swing formation. So we have a daily level, you go to the 4-hour time frame, right? You go to the 4-hour time frame. We don't know if it's going to be a PSP just yet. So price gets into that level, giving us SMT fill. Now, we can see that as price gets there, the next candle opens. We don't see anything between these highs, right? You don't see any PSP. You don't see this next candle being a SMT taking out the previous candle's high. But if you go to gold, right, look very carefully there. Let's zoom in close so that you can see, right? Can you see that gold indeed takes out the high, while in silver fails to take out the high? And if we measure the distance between the SMT, can you see it's 18 bars? I incorporate the second SMT, it's 19 bars. It is within 30 bars. So this second stage cracking correlation taking place here is a confirmation to this and will be considered a actual second stage. Do you understand that? You see why it makes sense? So off rip, while I'm seeing this taking place, I immediately already know that I already have two stages here. So all I need now is a lower time frame swing formation. So we're here on the 4-hour, right? As this candle opened, fails to take out that candle's high, while this candle opened, taking out that candle's high. This is during Asia session, mind you, right? While this candle has failed on the lower time frame, you would try to catch the wick for the sell, right? Because you are trading a C2 C2 reversal into expansion. That's the candle you're trading. So you would use a lower time frame swing formation. And since we're on the 4-hour time frame, which time frame are we going to go to? The 1 hour, or the 13-minute, or the 15-minute. If the 15-minute has a two-stage there as well. You see that how mechanical it is? So, okay, we're going to go to the 1 hour to see if we see something there. So technically this is where it is, right? Because this previous candle was the 2100. This is where the 2200 4-hour candle opened up. So this candle opens, fails to take out this candle right there. I'm just going to refine it till here, right? While this candle does open up and takes out that candle right there. So here we do get a swing formation. So you could trade after this candle closes, because this candle closes as a C3 a C3 closure candle, because it fails to take out the previous candle's high, while it also closes below the opening of this candle, leaving the C2 intact, right? But you know what I said earlier on is that the lower time frames usually give the confirmation before this candle. So while this candle was trading, before it even closes, we may have already gotten a confirmation on the 30 or the 15-minute time frame. So I'm just going to check that, right, to make sure that is the case, right? So over here, as this candle opened right here, and we failed to take out the candle right there, right? On this candle, I'm not seeing anything just yet. Although this is a C2 closure, so can you see how this candle opens, takes out the previous candle side and closes within the range? You can already trade the next candle, right? But I like to also look for second stages here as well. And then the time frame that has a second stage, that is the time frame that I'm going to trade. So let me just check GBP. Okay, I don't see any PSP there. Let me go to the 15-minute time frame, right? I don't see any PSP. I wouldn't consider this one. I don't consider precision swing points. I like to precision candles, because this candle is inside the range. It's not taking out liquidity, so I would not consider that, right? What I can see over here is that we do have this candle not taking out that candle's high, while this one is taking out that candle's high. But I don't really like to consider that on the M15 time frame. I only consider consecutive candle SMT on the 30-minute time frame. So we don't have the second stage here, but we do have it on the 4 hour. So I guess I would just use a swing formation to get alongside the moves. Over here, you can see this is a C3 closure as well, right? It happens very earlier on, right? So this is where I would be looking to enter from the 2300 candle, right? So we'll go to M5, and from 2300, we're going to see if an entry has formed, either prior or at that time, right? So here, 2300, right? So you can see right here, this is where 2300 opens. And you can see that prior to it, we have this CSD, right? So you can see the price then closes here, right? And we do have a gap, so you can just use the gap. When 2300 rallies into that gap, you can sell there, put your stop above the high like that, right? And yeah, you would be selling lower, right? You would actually hold this, and you can see how it eventually trades lower. This is Asia sessions and London sessions, so sometimes it can be on the choppy side, but you can see how it eventually cascades lower. Get the risk reward, not that crazy. I would never hope for that. I'll just aim for 1:3 and be done with it because of my consistency rules, right? So that is how you would catch that 4 hour candle for that day, right? But we are focusing on the next day, right? That's how you would catch that daily. This is how you would catch this candle right here for the sell, right? And you can see how it eventually cascades lower. So the next day, what you would do, right, for a continuation, because you can see this is a C2 closure and is a PSP and it has SMT fill with it, right? So this day, I'll just mark this candle's range and I would go from the daily to where? The 4 hour time frame, and see if I have a refined key level inside of there. Now, when I don't have a refined key level, so if you look inside here, we don't see any gap in any of the assets. So coming into the next day opens, Asia rallies down, right, and expands lower, right? So the way that I would trade this day, right, I'll show you, is that I would allow Asia to pass, right? And then can you notice that the Asia session just rallies down lower, right? So by the New York session, I probably won't be looking to buy because there are fair value gaps above the marketplace. But you can trade the London session as a continuation, right? So you take the range and you would look for a refined key level inside of there, right? I'll do the same thing here. So you go from the 4 hour to the 1 hour to see if you can find a refined key level. And you can see here we do have one, right? So look very closely. Look, just look at this. We have this gap here and this um, candle right here. Notice that here we don't trade into the gap, while here we do trade into the gap right there. Can you notice that? So that is what an SMT fill at our what? Refined key level. So this is how you would trade the London session as a continuation. But to me, this is just one stage. So I need a second stage to take place. So while this candle opened and is having that SMT, I would probably check the 30-minute if I'm seeing any second stage taking place there, right? I'm not seeing anything here. I'll go to the M15. And on the M15, what we can see, let me just also check Euro, XAU Euro. You can see that here we have a PSP. So we have a PSP taking place here. I just want to check something quickly. So we have the SMT taking place with the between GC and SI, which is gold and silver. And then on M15, confirming that right there is a PSP. So this is technically a two-stage PSP because one fails to take out the high, right? While the other one is taking out the high, right there. So from 3 o'clock, when I see it taking out the high of the PSP, because you can see that over here. This is why I use the indicator, because it helps me see all these things. So you can really miss something if you don't look too carefully, right? So you can see PSP, right? And then over here, this is basically price trading into the high of the gap. If you, this 15-minute high is the high of that 1 hour gap that we just marked, right? And if you look on this time frame, it is actually a two-stage PSP. So we have a PSP, right? And then the next candle comes taking out, failing to take out the high, while over here we are taking out the high. So right here, from the 3 o'clock candle, when we see that taking place, because the SMT is currently in play, I would be looking from 3 o'clock to find a setup there, right? So right here as this candle on M5, I see that it failed to take out the half the PSP and we get a CSD right there. That is where you would look to enter right there. I know it looks crazy, but believe me, I've caught trades like this before, right? And look at just the risk reward that London would have given you. It's crazy. You don't have to aim that much, right? I would literally, you're obviously not going to target this much. I would just target the nearest term low because it's the best thing that you can do to ensure that you, and I just like to target 1 is to 3, 1 is to 3. But can you see that? This is how you would catch that move, easy peasy, lemon squeezy. But you'd probably catch it from here because that's where the next candle opened, right? After the CSD. So yeah, price eventually goes down. And yeah, that is how you would catch a continuation in London session, right? So now also within that same day, right? Can you see? I would probably not look to trade the 6 a.m. candle because if you look at the 2200 candle, I mean the 1800 candle, we open and we just rally down. So I either would expect the New York session to be like a complete um, reversal or a retracement. But when I see that price on the 6 a.m. New York candle comes back into the range, and now the 10 a.m. candle is opening very close to this key level that was formed in the London's in the Asia session, right? We can use this for an intraday continuation. So look what happens right here. The next candle opens, right? Trades into the gap right there, right? So if you look here, we trade into the gap. I'm just going to take this out of the way so it doesn't distract you, right? Trades into the gap, um, whilst this one fails to trade into the gap, right? I promise you it's the same thing over. If you think I'm cherry picking this, you can go back in your chart and see so many examples of this happening, bro. It's crazy. So you can see how price fails to get into this gap while this one is trading. But this is one stage for me, so I need a second stage, right? And since we're working with a 4-hour gap, and this is a 4-hour swing formation that is taking place because it opens up on the 4-hour, rallies up. What candle is that? A C2 reversal into expansion, right? So I'm seeing the SMT. I will go to the 1 hour to try to find a second stage and another swing formation taking place. And lo and behold, as we are getting that second stage, can you see here? Bearish candle in gold, bullish candle. So we have two stages. Let's measure the stages, right? If I measure from the entry of that gap over here to the second cracking correlation, that's just 8 bars. So that is within that 30 bar range, right? So it is a second stage cracking correlation to this time frame, right? So over here, when we get that, the next candle you'd obviously look to trade because that is when the PSP closes and it is confirming the SMT fill that we saw on the 4-hour. Then you can go to the 5 or the 3 minute time frame, right? Let me use the 3 minute because I've been using the 5 minute constantly. Show you right here. So from what time was that? Let me check what time was that again. That was okay from 11 o'clock. That's when I'm going to look for my for my entry to enter because that's when that candle closes, right? So over here, right, you can see this is where the 11 o'clock candle opened up, right? And you can see that prior to the 11 o'clock candle, you can see the CSD that was there, and price is really working inside the small gap that was there, right? So as price open, you can either sell as price is in the gap or you just sell as it open, put your stop above there because this is the main CSD where the SMT was anchored to, right? So you wouldn't really expect it to go above that high, right? So you can sell somewhere in there, stop loss above the high, right? And you can target the intraday low that is there. But me, I wouldn't do that. I target like a 1 is to 3. But you can see easy 1 is to 4 right there. I promise you, it seems like it's cherry picked, but this stuff, I'll later on in the video, I'll even show you the certificates or whatever. It's not really important for passing challenges. Because I'm telling you, like, you will get to a point where, like, passing challenges is like, it's not that big of a deal anymore because you will get used, but you need to mark charts over and over again so that this stuff is embedded in your brain. Let me do that thing that I showed you before, right? So this is the candle that I would be looking to enter on, right? I'll put my thing right there because we want to qualify the trade, right? You go to the 6-hour time frame. You can see that if I take from the opening of the 6-hour time frame, I'm not going to do this for every trade. It's going to make the video too long, but I do this on every trade. I'm not going to do it on every trade in this video. Sorry about that. I'm not going to do this on every trade in this video because it's going to make the video too long, but I literally qualify my trades like this in all the trades that I take to make sure that I am trading a valid setup, right? So this is the 6 hour opening, right? And this is where we open, and this is the high that is currently in a place where we get that CSD with the cracking correlation. And this is where I'm expecting price to not go. So this range that I marked is the protraction range, right? And if I take this box and I try to fit it inside the previous candle, can you see how it fits many times inside it? So that tells me that this wick is not too long, right? And it does support expansion. I go to the 4 hour time frame and I do the same thing. So I shift this to the current candle that is in play, right? The opening to the high that is there in play, right? I'll just shift this there, right? 4 hour opening, right? And you can clearly see that if I take this wick right here and measure it with the previous candle, you can see how it fits many times in the previous candle. So clearly the wick here supports expansion. And look here, there's a gap. But guess what? That gap is being filled in this other asset. So if all three assets were not inside this gap, or I mean, if all three, yeah, if all three of the assets were not inside that gap and I was finding some kind of sell, I would not sell. I would not sell because you're selling into a magnet again. You cannot see a near-term gap. You cannot see a near-term gap that is very close to you. It's going to fail. It's going to fail. So you always need to check the time frames to ensure these two things. Check 90-minute time frame. 90-minute time frame, the wick is very small as well. You can see the opening, the high. You compare it with the previous candle. This can literally fit many times in the previous candle. Do we have any gap that is not being filled? Here we have this gap right here that is near term, but in the other asset we are filling it, right? And when I say near term gap, I'm talking about, like, let's say the previous candle. Over here, you can see that we're working on a higher time frame SMT fill that is higher than the 90-minute time frame. So I won't say, oh, look at these gaps are not being filled there or whatever, right? But you can see that over here we are filling the gap in there, while here we're not. So it does meet the rule, right? It does meet the rule. So it's not like we're leaving gaps unfilled on all of the assets. So it does meet the rule. So once I've qualified the trade, I feel very safe to sell and know that price has no reason to go higher and stop me out before it goes in my direction. So back to the 3-minute time frame. I do this beforehand because sometimes if you're doing this while the entry has already formed, it can leave without you. While the candle is forming before the entry on the 6 and the 4 hour, I'm just ensuring. And then when the CSD forms, I just quickly check on the 90-minute as well. And yeah, that's how I know, okay, this trade is probably not going to go any higher and it's going to go in my direction. This is how you qualify your trades. Very important doing this on all of your trades. We have so many examples to go through. It's crazy. Yeah, guys, I don't think we have enough time to go through all these examples. I'm just going to go straight to oil because there is another, I think we did actually go through that example. Yeah, we did. I'm going to go to oil, right? So on oil, you can see that, let me just full screen this, right? We're on the weekly time frame, right? And we have a SMT fill. Notice here that here it's a gap, but here there's no gap, but I'm still marking it as SMT fill. Some people will say that's wrong, but you are making a great mistake if you are ignoring this kinds of SMTs, right? So we have a gap, price trades into the gap, price also takes out the low, which would be the low of this gap right here. But here price failed to take out that low. So we have SMT fill taking place, right? And the previous candle is also a PSP. So it's like a two-stage PSP where the immediate next candle takes out the low of the PSP while in the other asset it fails to take out the low. So here you have two-stage taking place here on the weekly time frame, right? And while this is happening, how do you confirm a weekly, right? How do you confirm a weekly swing? With a daily, right? So you go to the daily time frame and try to see something there as well, right? Like, let me go back to the weekly. I may have hidden it. It's not visible on the weekly. So I'm just going to go to visibility. Well, that's the problem, right? It's not showing up. So I just need it to be visible there as well, right? We'll go back to the daily right now. 1D. And yeah, so you can see that when that takes place right here, right? Guess what happens afterwards, right? This candle, right? Right there, I believe this is where the actual SMT takes place, right? I'm just putting it there, right? There. And then the next candle comes right here and also takes it up there and there, right? Can you see that right there? So when this happens, we will probably, this day you could have caught a buy. I'm not going to go into how, you guys can literally go check for yourself. You'll see that the same things that I showed you in the previous video is Same thing occurring here. And just so you know, this is the oil triad. It's oil, I mean HO, CL, and RB. That's the oil triad, right? This is crude oil. It's compared with heated oil, and I forgot what this one is called. It doesn't matter. I don't care what it's called. I just know that this is the oil triad, and it gives SMT, and it gives great setups, and it's absolutely wonderful, and I like it, right? So, yeah, we have this second stage SMT and a PSP right there. Can you see this is a bearish candle, a bullish candle? So even on the daily, it's confirmed, right? So you could have caught a buy on this day because it was a second stage, and then the next day it confirms. So this day you can try to buy as well. So I'm going to show you how you would do that, right? This is a C2 closure, right? So the way you mark your C2 closure to get your refined key level is like that. You mark it from the wick, and you want to see price respect the upper half of the wick in a bullish scenario, right? While this one is an expansion candle, so I just mark the entire range, and I want to see it respect the upper half of the expansion. Here, it is a C2 closure with a long wick, so I want it to respect the upper half of the wick, right? So on the daily, right, and we're trying to trade the next day, where do we find our refined key level if the previous day was an expansion? The 4 hour, we go from the daily to the 4 hours. It's the same thing. It's the same thing, right? So over here, right, we look very closely this day, right? There will be times when there is no refined key level and price just expands away. So you can trade the next candle or the next price move that takes place, right? Especially if you have a draw on liquidity that is still in the market. So one thing I want you guys to also pay attention to right here is that notice here, right, on this candle we come and let me show you that right there. On this candle right there, this candle has taken out that high. Many of you would be like, oh, that's SMT, let me sell. That's SMT, let me sell. That's what some of you will be thinking, I believe, right? I mean, not there, here, right? So this candle takes out the high. This candle was still here, right? When you have a higher time frame cracking correlation and you see all of them expanding with that higher time frame cracking correlation, look how many stages we had PSPs, we had SMTs, we had second SMTs, and all of them are expanding. Generally, this SMT, if they're expanding at the reversal, this SMT is fake. It's fake news, right? So what happens is that you're going to notice that the asset that took the high over here is the leading asset. And what is going to happen is that it will switch strength while the lagging asset will gain strength. So notice here, this one that took out the high, it was the strongest asset. Therefore, it was leading, right? But now it switches to a weaker asset when it makes a lower low while the other one is making a higher low. It's doing that to give the other ones opportunity to catch up, right? Especially here, RB no is very far away from that high right here. So that is a very powerful price signature that you guys should look into. Strength switching. I'm not going to cover it's deep. I'm not going to go too deep into it. I just wanted to mention that, right? So here we are trading into a gap. Here we're failing to trade into a gap. Here we're failing to take out the candles low that was a gap on the other two assets, as you can see. And at the same time, this candle is a PSP, so it's a two-stage. So can you imagine the same thing that was happening on the higher time frame is also happening here as well, right? So it's models within models. So you can see over here, you take out the low, and you can see that this candle opens lower. So we know that it is a C2 reversal into expansion. So we can catch the wick using the lower time frame cracks and correlations and swing formations, right? As we did in the previous examples, right? So I'm going to go to the 1 hour and see if I can find anything there, right? 1 hour, we're not seeing anything. 30 minutes. In fact, you know what? I may have jumped the gun. So right here on the 1 hour time frame, just want you guys to notice that very here we do not take out the previous candles low, while over here we're taking the previous candles low, right? But I wouldn't really consider this a two-stage just yet because I want this one to be the first one to take out the low. Then I see it as a second stage. So no, I'm not going to consider this, right? So sorry about that. I may have jumped the gun there, right? So let's go to the 30 minutes to see if we can find anything. We already have two stage, so we don't need two stage per se. I just like to see it, right? So I just like to choose the time frame where I see a second stage taking place. All right, so okay, here, this candle touches the gap, right? So right there, I would anchor. This is where the SMT began on the 30-minute time frame, right? And then the next candle comes and takes out this candle's high as well, right? And let me show you that over here, right? Can you see over here? That is where that candle's SMT takes place, and then the next candle over here fails. So it's consecutive candle SMT, right, on the 30-minute time frame. So that is a second stage taking place. So off rip, when I see this taking place, I can already start looking for a lower time frame CSD, right? So go to the 5 minute time frame, or even the 3 minute, depending on where you see it, right? The SMT is currently taking place. I can see that it failed to take out that high. I see these two down close candles right there. And yeah, when we close above those two down close candles right there, you can wait for a gap, or you can even just like buy right there already. So where would you place your entry? You would place your entry there. Stop loss below EQ of this long wick, right? Target. I don't trade HO. I like to trade CL. So let me just do it on CL rather, right? So over here we have the SMT. Let me zoom in closer to that. No, but I'll check the 3 minute time frame because I also cycle between the 3 and the 5 minute just to see which one gives me the CSD first. So over here we have these three consecutive candles. Price closes there. We have a gap. You can enter at the gap, right? CSD as when we close above these consecutive down close candles. We have a gap. You can enter in at the gap. Stop loss below, uh, um, like EQ of that level, or whatever, right? And you can target 1:3 or a near-term liquidity. Like you can target that high, or the asset that I would enter in, because this one did not reach its own high, so it's probably going to be the strongest because it's in a rush to get to that high, right? So you can also trade this one as well. So right here, as this candle closes, RB closes above this two consecutive down close candles there, right? Stop loss below EQ of this long wick. Where would your target be? The high that we are in a rush because we're given a strength switch to get to, right? So you can see how price gets there. And it does even trade higher than the high, I believe. Gives like a retracement. Let me check. 15-minute time frame. Oh, it actually reverses. But yeah, this is one of those setups that don't really give that high of a risk to reward. But yeah, if you just target the high, you would have just one, I believe, right? I probably would get out at break even because by the time price is all the way here, I'm at break even already, right? And it probably would have stopped me out at break even. I have to be honest, folks. I have to be honest because I like 1:3. Right, so now we are on the index futures triad, right? Yeah, let's go to the daily. Notice I have RTY over here, right? Now I want to explain a rule with RTY. When you are gauging cracks and correlations with RTY, you only compare RTY with YM, with Dow Jones. You do not compare RTY with ES. You do not compare RTY with NASDAQ, okay? Trust me, if you do it this way, you will get it right, right? So you can see that this day opens low, rallies into a key level, which is a low at the other side of the left, right? We get that rally. So when you see something like this where we open and rally into a key level, you already know that this is likely going to be bullish. It's likely going to be a bullish day, but you don't immediately buy. You use the techniques that I've shown you to be able to catch the swing formations, the crack and correlations there. So you need to be able to confirm this low, right? But just by it happening, you already are expecting it to take place, right? So this is a key level we're seeing on the daily. So what are we going to use? A 4 hour, right? And notice the key level is within what, right? It is within 30 bars. But if I go to the 4 hour time frame, right, and I look at that same key level, suddenly it is 61 bars. So when I say a daily key level, the reason why I'm saying that is because on the daily time frame or even the weekly time frame, that level is within 30 bars. Suddenly when you go to the 4 hour, it is more than that. So it is not pegged to this low. You understand? You're looking for a key level that is within the last 30 bars, within the last 30 bars, right? So over here, right, um, I believe there was something. No, sorry about that. I remember this day. This day was manual intervention. The reason why I marked this in the first place because I wanted to show you guys about that. Notice how price on one candle, the New York candle, just suddenly explodes lower. In fact, let's go to the 1 hour time frame to show you that. I want to show you guys when to know when something is manual intervention. Can you see that the entire day's range is encapsulated in just 1 hour, a 1 hour candle? This is not how the market works. The market does not reach a higher time frame drawn liquidity in just one candle. Here there was a PSP, I believe it was in Nasdaq. Let me check NQ, right? Yeah, there was a PSP there, whatever, that form, and but that is manual intervention regardless, because the market will expand, retrace, expand, and it needs to get to a level within a specific amount of time, right? So when this happens this day, you immediately drop the indices. You don't try to trade it. You don't try to. I've seen many people trying to trade this, saying I'm seeing Monday's high as a draw on liquidity. No, 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 no. The day is already cooked. We've already met every possible objective we could have met for the day, right? Within this one day. So you'd have to wait for when? The next day. So reason why I marked that candle's range is to show you that the next day we can use it as a continuation. So this is the 4 hour, right? The 6 a.m., the 10 a.m., the 14 a.m., and then the 1800. Why am I saying a.m. here? The 14 p.m., the 10 a.m., the 1400 p.m., and the 1800 p.m., right? And this is the new day. This is where the new day starts. So you can see on the new day, we open up and trade into that key level, right? I want to show you something, right? So we'll go back to RTY. So, right, let me just fast forward a bit. Right. So the next day, what happens is that price, I don't know why RTY is opening at 1800, I mean 1700, while the other ones are 1800, whatever. Right, price opens, rallies into the gap, which is our refined key level, right, for the next day, right? And then inside of the refined key level, we get an SMT taking place in it, right? You can see. And notice I'm marking it between RTY and Dow Jones because we only compare the two together. I don't compare RTY with ES or NQ. So right here, when this candle opens, rallies taking out that high, giving me SMT, that's my first stage, right? I don't have any second stage just yet. So I go from the 4 hour to the 1 hour to check. And then I cannot see any second stage here. So I will go to the 30-minute time frame just to see if I see anything. And you know what? I'll also check NQ at the same time, just in case, right? And you can see in NQ, if I compare NQ with Dow Jones, right, you can see over here on this candle right here, even with ES, you can see a bullish candle, a bearish candle. So can you see how we are using RTY in conjunction with the index futures triad, right? So sometimes you will not see a stage within the triad, but if you compare RTY and Dow Jones, it can help you frame trades within the same triad that you're trading. So here we have a PSP because this one is a bearish while this one's a bullish candle. So that tells me that in Dow Jones, right, we have two stages technically in Dow Jones, right? We don't have two stages in ES or NQ. We do have in Dow Jones. So that day I would either trade Dow Jones or I would trade RTY, but I would trade Dow Jones since Dow Jones is the one that has the two stages, right? And the reason why it has two stages is because I'm comparing it with NQ, where we have the bearish candle and the bullish candle. But in RTY, right here, in RTY, we have the higher low SMT as well, right? But the higher low SMT as well. So immediately this candle closes at 10, you can look to buy already. So because it's a PSP, from 10 we'll be looking to buy. So you can go to the 5-minute time frame and see if your entry is there already, right? 10 o'clock. We open at 10 o'clock. You can already see we've already had a CSD there. So from 10 o'clock, right there, as we CSD'd on the previous candle, the 10 o'clock, you're already looking to buy, right? And again, let me do that thing that I showed you guys of qualifying the setups, right? So let me go to the 6 hour. I'll run through this really quick, right? You can see that this candle right here, the wick is rather long if you compare the opening price to the low and you compare it to the other candle. But what did I say? It is only permitted to be long if it is taking out the previous candle or candles high or lows. In this case, it's taking out the previous candle's low, so I will permit it to be a long protraction. If it was retracing into the previous candle's range, it has to be a small wick. You understand, right? So here, it is long, it's permitted. And I see on this time frame that we are at least filling in this gap, and there's no gap that is left unfilled or whatever, right? For our time frame, on the 4 hour time frame, let me go back to 5-minute time frame quickly, because but even on the 4 hour time frame, we are taking out the previous candle's low, so this is permitted to be a long wick, right? It's permitted to be a long wick. And then on the 90-minute time frame, right? This is permitted to be a long wick because it's taking out the previous candle or candles lows, right? So it's permitted to be a long wick because it's giving us SMT. Price was in a consolidation, comes, takes out the low while another asset is failing to do so. And you can see below us, we don't have any gaps that have not been filled, right? So this is how I qualify the trade. This is how when I go to the M5, I will trust that the CSD is a real one. a real one, right? And the next candle that opens, I can trust that it will just open and expand, right? I'll target like a 1:3, right? And you can see price waste no time getting there, right? So that's how you would do it, right? Yeah, let's do the last example, folks. I'm sorry this video is so long, actually. But then again, for those of you who want to be profitable, this is nothing, right? This is nothing. Because you know the amount of work that it takes to get to the level of profitability. So this is the last example on the daily. You can see we have a PSP. The next candle opens up, fails to take out the low. While here we do take out the low, and we do take out the low over there, right? So I would also mark it in RTY as well. Now, obviously this is within 30 bars because it's literally that close to one another, right? So it meets that 30 bars rules. And you will notice that I'm not really mentioning the 30 bars rule because it's something that I just do subconsciously. I'm not doing it justice by not mentioning it frequently because you always have to do it that way, right? So this candle opens, fails to take out the low, while this candle opens, takes out the low. You know that when that happens, you are expecting a C2 reversal into expansion candle, right? So we already have two stage already, but I like to see lower time frame two stages as well because the market always gives it. So from the daily, we go to the 4 hour as usual, right? And you can see this is the Asia session candle, right? And that's where it opens right there. So I'm going to mark the 1800 candle as the daily open, right? That's where the day opens up. We trade, fail to take out that low, while over here we are already taking out that low and the previous candle's low. So even on this time frame, we can see that this is a C2 reversal into expansion. So we would try to catch the wick during the Asia session. That's crazy, right? Asia session. So I'll go to the 1 hour to check if I see anything there on the 1 hour. Like this is the protocol that you literally follow, right? Now I want to show you guys something, right? Um, Let me show you guys. Um, Over here, right? No, sorry about that. Um, right. So over here, right? This is what happened in the PM session, right? So I want to guys show you guys another cracking correlation that you guys may not be aware of. This is a bit on tougher to see, but if you have experience, you will see this like clockwork. Can you see that we had the SFT here, right, and the failure swing right here, and then we had the second stage right there. But then what happens is that 1800 candle comes and takes it out there, takes it out there, takes it out here. This is what we call a SMT break. Whenever you see this happen and it's like the SMT that was in the marketplace is broken, there's a tendency for price to reverse there. So the fact that we're still keeping this low intact, but we broke this near-term SMT, that is seen as a second stage, right? So I know that this one is a bit advanced. That's why I hesitant, but I just want to give you guys something to think about, right? So this will be seen as a second stage, right? And this is a C2 candle, so I will try to catch it. Let me check the 30-minute time frame. 30-minute time frame, and then let me check the 15-minute time frame. On the 15-minute time frame, we do get that C2 closure. So we do technically have a two-stage already on our hands when we break the SMT as well, right? And I'll show you on the 5-minute. I don't like to look for PSPs on the 5-minute, but I'll show it to you, right? So let me show you. When we have those SMT breaks, right? Look very closely here. You have a bullish candle there. You have a bearish candle there. So it confirms the SMT break, right? It confirms the SMT break. So starting from the next candle, you can already look for an entry. So as you can see, we have this series of down close candles. Price closes above the series of down close candles. That is where you would enter, right? So I'll do it on Dow Jones in this case. As we close past the series of down close candles, we have a true change in the state of delivery. Stop loss, EQ of this candle's wick, and yeah, then target like 1:3 or whatever you want to target. Like if you want to target this near-term liquidity, you can target it there, right? And you can see it gets there. And let me just do that thing one more time to show you guys again. So the entry is taking place here. That is where the entry trigger takes place. So you go to the 6 hour to qualify it, right? Sorry about that, right? You look at the opening of the candle to the low, you can see that it is actually a small wick. So it supports expansion and there's no gaps below market price that could cause price to draw towards them, right? That's good. The 4 hour time frame, you check the same thing as well. Yeah, the wick is on the longer side, but again, it's taken out the previous candle's low, so it is permitted to do so. And we don't have any gaps below the marketplace that we've not filled in. As you can see, these gaps over here, we filled them in already, so no issue. Here, there's literally no gaps there. So that's fine as well. And then 90-minute time frame. On the 90-minute time frame, this wick is a bit on the long side, but again, it's taken out the previous candles low, so it is permitted to be a bit long, right? Same thing here as and same thing here, and we don't have any gaps that is near to us that price in all three assets did not fill, so that is good as well. So that is how on the 5-minute time frame I would trust the entry right here, right? And you can expect price to expand to your direction, right? So with that being said, this video was long and it may be boring to you, but like again, it's the same thing. Like show me in the video where I'm showing you something completely different. It happens every day. It didn't even take me long to get all these examples. I just took the examples that I either took or I saw taking place and I said, wow, I can't believe I was asleep during the Asia session and I missed that trade. So I just wanted to show you it happens in any session. So for those of you that are not living in a time that is conducive for New York session, because New York session is the highest probability, it's the session that expands the most in your favor most of the time. So if you were asking me which session can I trade, I would advise the New York session. But even if you can't trade the New York session, folks, you can trade London, you can trade Asia, you can trade the PM session. You just have to see these things. They happen so many times. There's multiple setups a day. This is not an invitation for you to come and trade every single day, because that's why I don't want to bring this out. It's not, I mean, this is not an invitation for you to trade every single session. Some people can do that, but I don't advise you because, like, what is the point? If you're entering trading to become a full-time trader and you decided that you wanted to trade because you want financial freedom, you want to have more freedom to do what you want, why would you become a slave to the chart by always trading every session? Doesn't make sense to me. Well, you do you at the end of the day. But like I said, if you want to practice risk management, you limit yourself to just one trade a day, even if with a 50% win rate, bro. Like you can see how much risk rewards you're easily catching, bro. Like let me even show you this trade. It really expanded. Um, it really expanded. Go to the 15-minute time frame because this is gonna take forever, right? Really expanded. I'm just trying to encapsulate how far it expanded for the day, right? So we almost, boom, that's crazy, right? And you might think 1:7 is a lot, bro. I'm telling you, a lot of these setups give like 1:3, 1:4, 1:5, 1:7. I've seen some that give like 1:10 and above. I'm not saying that you should expect this kind of risk reward on all trades, but if you are systematically targeting a particular liquidity for the day, right? Say this is the liquidity I'm going to target, and this is the kind of risk to rewards that you are getting, bro. Even if you had 50% win rate, it doesn't even matter. It's crazy. It's crazy. Like if your risk reward was like 1:2, 1,5, and you had 50% win rate, it's not that good. But with anything above 1:3 and a 50% win rate is crazy. And at the beginning, your win rate is not going to be that high, but the risk to reward is what is going to save you. And what you need to do is mark charts, like have 100 of these examples, and they're not that hard to find. I didn't take long to compile this to share this with you. It didn't take me that long. I'm telling you, by seeing it over and over and over and over again, this video felt very repetitive, didn't it? Well, you need to practice because I'm telling you, um, it's very, very powerful. Very powerful. It's crazy, I'm telling you. You just need to practice. I mean, even just this week, I think I passed like 2 accounts, right? 2 funded accounts. You can go and check that for yourself, right? And it wasn't like it was hard to do anything. It was just whatever. I just wait for the setup. And when the setup is there, I took them, right? You can verify that for yourself, right? Two, this account and this account, right? And guess what? This coming week that's going to take place, I'm going to pass more. I'm going to pass more. So practice these things, right? Because my goal right now is just to add more capital. Like I want to try to max fund a lot of these prop firms, right? And this stuff works, folks. Like it works. It's crazy, right? And you just need to put in the work because it really works. This video, many people, they're probably not going to watch the entire thing, but to those of you that has watched the entire thing, you are going to see just how powerful this stuff is. And yeah, I combined the 30 bars rule, which is of my own creation, with GxT, and yeah, it works very, very well for me. Very, very well for me. So yeah, make sure you guys like, comment, and subscribe. And yeah, we'll see in future, more future videos to come.